What are Yankee bonds in Latin America? Have you ever wondered how foreign companies tap into the vast resources of the United States for funding? One way they do this is through something called Yankee bonds. So, what exactly are these financial instruments and how do they relate to Latin America? Let's break it down. Yankee bonds are bonds issued by non-U.S. entities, like companies or banks in the United States. They are denominated in U.S. dollars, which means they are not directly linked to Latin America's financial markets. However, they play a role in shaping the economic environment in the region. These bonds are structured in tranches, which means they come in different segments that vary in risk levels, interest rates, and maturity dates. This setup allows investors to pick the bonds that match their financial goals and comfort with risk. Since these bonds are in U.S. dollars, they help protect investors from fluctuations in exchange rates, but the issuer must manage the risk of currency exchange. Now, you might be asking, how does this impact Latin America? While Yankee bonds are not typically issued within Latin America, they can influence the financial landscape. For example, if a company from a Latin American country issues a Yankee bond, it can access U.S. capital markets. This can be a game changer for companies that face high interest rates at home or struggle to find local financing. When we look at sovereign debt in Latin America, we see that many countries face challenges in developing their local bond markets. Historically, these markets have been underdeveloped, leading to a reliance on foreign currency-denominated debt. However, there have been efforts to strengthen local markets, aiming to reduce vulnerability to external economic shocks. Understanding Yankee bonds can help Latin American countries navigate international financial markets. While these bonds may not directly solve local financial issues, they illustrate how international capital can be accessed and managed. This knowledge can guide strategies for building stronger local financial systems and managing foreign debt effectively. In essence, while Yankee bonds may not be directly tied to Latin America, they representing a broader trend of international financial integration. This integration can significantly impact the region's economic strategies and overall financial stability. So, next time you hear about Yankee bonds, remember their potential influence on Latin American economies.